Hello and welcome to week number 29. We're starting off by having a look at the Scotiabank CFTC report. Quite a big move on the euro and the pound side, where we saw over 11 billion long, and now that's reducing to under 9 billion. Notable long positions haven't really moved, but it's the shorts that keep adding on the euro side. That's pressuring the whole thing about. Open interest took a bit of a hit, but what I'm thinking right now, market is in an environment where they're seeing that there's a lot of risks happening in the market. Euro might struggle going forward, which in my opinion should mean that longs will eventually have to capitulate as well and drive this closer to zero, which should be quite a bigger move for EURJPY to the downside. More or less the same for GBP, where we saw long positions trimmed, shorts added, open interest a little bit down, but basically means that the pound position is close coming to zero. So the whole long positioning unwind is underway, and I feel the same is due for euro as well in the coming month. There wasn't a huge amount of movement on the other pairs. I think we saw a little bit more negative positioning on the AUD, as the RBA is staying quite a bit more dovish. Plus we have this whole reflation trade unwind, and people are positioning for that too. So that was a quick look from the CFTC report. Gonna take you to the next week. There is not a lot of data that will give us a hint on what to do, and usually you will find that in July market gets very choppy towards this part of the month, so the second part and towards the end. July markets are very fickle to trade. Actually, you find a lot of traders just take time off in July and early August and start engaging later August and towards September again, because market gets very tricky to analyze, very tricky to trade. Patterns are very different in that environment. So if you are trading, just have that mindset, get ready for a little bit more challenging market and be more selective in what you do. I'm pulled up before I go through the calendar, I pulled up the 10-year over 2-year yield spread. Let me see, that's not that. This is only the 10-year. I was meant to bring up the 10 over 2, and here we are. So this one here is the yield curve, the United States, the 10-year over the 2-year. I think we discussed this last time. The hope was that we're going to get some sort of a rally here, but it faltered midweek and we're back down to these lows, and now it really looks like we are about to head lower, and this continues to flatten out. And if you have a look at the 10-year yield United States, it looks like the 125 is going to get threatened again. We're moving back to 120, so this should be your next zone of this should be the next zone where you feel like we might get a bounce or we might not. The 120 basis points. So they were quite critical if market can punch through this. So the thinking is, and I'm a bit late to come to that realization as well, because you listen to all these good bond traders and analysts saying yields have to come higher. But the thinking is this: the Federal Reserve is buying the 10-year notes, which is driving the yields lower to some extent. But really what's happening is the rest of the public is buying into it. It's just buying what the Fed is buying, and it's just dragging the yields down and down and down until I feel like the Federal Reserve will stop buying, or they sound a cautious horn. So until that happens, I feel like this trade will continue to come lower. And guess what? There's one of the pairs that's highly correlated with that, which is most of the yen pairs, specifically EURJPY. So EURJPY in orange, and the yield curve in there, you can already see that EURJPY is just about to give up the lows and start meeting where the yield curve is headed. I'm going to actually bring up EURJPY on its own so we can talk levels. EURJPY, Euro yen. The Euro yen right now trading comfortably about 129, closer to 130. I don't feel that it's sustainable. Now, mind you, on Thursday we'll have the ECB. They are meant to be dovish. That's well known, well in the price. So after the event is due, we should see a little bit of a spike up, because people are starting to take profit on the whole dovish repricing. But I don't think it will cause a new rally. I think you will start thinking about selling the rips, and we start climbing down to about 129. But I feel like we're closer, about stabilizing towards 127 area in the coming month, or as the summer rolls over. Something really new has to happen on the economic front. Some big has to happen in terms of inflation for anything of that to change, or yields start rallying aggressively. I will change my mind on that, but for now, as the time being, the more reasonable ideas for EURJPY to start climbing down towards 127. More or less the same thing for other yen pairs. So AJ in my opinion, should climb down underneath these levels. It started bouncing last week, but really that all gave up again, and the hope for another rally here is extremely low, so I'm more interested to look into sells. I really feel like we're going to get a spike about Thursday, and I would be interested to sell into that. If I have to use the calendar as a gauge, because the calendar is extremely barren next week, mostly first tier, second tier data, nothing I can really work with until ECB is due on Thursday, and then we can use these bigger events like the PMIs from Eurozone to see if they start really rolling over. Then the yen trade's going to get really hot. That's what I'm really interested in, to get a bit more heavy involved in those trades. Again, as I said, towards this time of the year, end of July, you want to be very selective about the trades you take. I strongly feel towards the end of the week we're going to get a little bit more movement. It has a bit more clarity to it. Quick look as well on Dow Jones and Indices. We've seen that they kind of faltered, even though data, inflation was strong, retail sales were strong last week. So it really feels like Dow Jones is starting to reject the 35k level, and we might trade underneath it for the majority of the next week. I will be looking to see how Dow Jones reacts around US cash open. If you are living in UK, that's about 2:30 my time, so about 2:30 my time, you see that the cash opens starting to create a little bit of bearish move. So one we had here, the one before it was around here, we had a bit bullish move that led into the bearish move, and the day before it we saw the same thing. We seem to keep seeing these rejections quite often now. Even here where we had the cash open, it kind of died down straight after that. So I'd be interested to see how this works out. I'm getting a bit bearish on this whole narrative because the PMIs peaked and all of that, and it seems to be like the next push higher for the Dow Jones might not come that quickly, might not come throughout the summer. So keep an eye on that. There might be a good short developing. Very keen to sell yen crosses, specifically EURJPY, once the setup comes along. What else I wanted to talk about? We had so we talked about US yields, they're coming down. We talked about the yen pairs. ECB will be a big mover for most of Euro pairs, so keep an eye on that. There's one last thing I wanted to talk about. So Euro NZD, that's a trade we've been eyeing since I think it was about March, first time I talked about it. End of March, I think we were around here. So we were trading just close to 170. Actually, we came near to close to 170. It started playing about, came down a bit, started attacking the 170 level, and now it's trading underneath it. Now, it's got a lot of reasons going for it. It should go lower. But there's one big reason why it's not. And that reason is that the whole global reflation trade is coming off, and NZD is hurting because of that. So if you've been following news, RBNZ is about to raise rates very soon because they're quite hawkish on the economy. Everything's going good. But as a whole, the narrative of yields coming down globally is really weighing down AUD, NZD, and to some extent CAD as well. And that's why you see that Euro NZD isn't really finding the leg you need, so the crash we're looking for, 300-400 pips lower. It will happen eventually once the yields start rising, but it might not come for another 5 or 6 months. Keep an eye on the whole story because it will be a good big trade to come, but you really need the catalyst, and the catalyst hasn't evolved yet. I feel like the catalyst will come once yields globally start rising, but until that comes along, we might continue seeing these choppy markets and even attack higher in that pair, even though if it goes against the logic. That's all I wanted to cover this week. Again, data-wise, really just try to focus towards the far end of the week. That's where the majority of the movements will come. And keep an eye on for the risk sentiment. I'm quite negative for next week. Feel like the indices should get hurt, yen pairs should get hurt, and that's where I will take my lead from there. That's all I wanted to say this week. Thank you very much, and wishing you all a very profitable week.